Hello traders, welcome to this week's Forex Forecast with one man. If this is your first time coming across my page or my channel, please subscribe and turn on post notification as I drop weekly Forex Forecast every week. Without wasting much of your time, let's quickly dive into gold and see what's up for the month of September. So on the monthly, we could still see we had a very nice month of August, which has engulfed the previous monthly high. So this is an indication that if you can afford a stop loss below the monthly low, then you can open a buy without any confirmation stop loss below this level and expect what? An all-time high. But if you cannot afford such a stop loss, then we take it lower to a lower time frame to be able to get a more smaller stop loss. So on a weekly without much confusion, we could clearly see that the price keeps creating new highs, whilst we have a very strong resistance over here. And this, if I should put it in a clearer way, this is giving what we call an ascending triangle, right? This is what we call an ascending triangle. And according to this chart pattern, which is what a bullish confirmatory or confirmation pattern, a break above this zone, the next target for gold is to simply measure the low and the high. And then when there's a breakout, the next target for gold after a breakout will be somewhere around 3,800. According to this chart pattern, right? Trading is reactive and not predictive. So when you see chart patterns also play a lot when it comes to gold. So when there is a proper confirmation, you know that the direction is going to be the high or almost 3,500 pips, which according to the monthly, when you open your buy using the monthly time frame, then it means that this is going to be your entry stop loss below the low, and then the target is what 800 850. So if you can afford such a stop loss, then that is your target and this is your stop loss. But on the weekly, as you've already said, if you can afford a stop loss using the weekly time frame, then you can also open an aggressive buy without any confirmation stop loss below the low of this the low of the trend line or of the pattern. And then as you already know, our TP is here. So if you can afford a stop loss, if you can afford this 1,300 pip stop loss, 1,337 pip stop loss, then you can open an aggressive buy when the market open without any confirmation. And that is, according to this chart pattern, your target for gold 3,800. If you cannot afford that stop loss, then we have to go lower on a daily time frame. Now on the daily time frame, the same pattern, so clean, so clear, means that if you cannot afford if you can afford the same stop loss on the daily, the story is the same and you can open a buy when market opens, and then you expect what the same well TP and then stop loss, right? Now let's look at market based off another pattern, which is what on the daily. On the daily, we could see clearly that what market is in a very nice range, right? Based off this range, based off let me make it a little bit based off this range, then we can assume that we are at the top of the range, and we can assume that we should see selling pressure coming in the market. But as it stands right now, there is no evidence for a sell, and there's no evidence for sell. And Friday we closed very bullish, which means that since there's no evidence for a sell, we cannot open a sell trade until we see an evidence to sell. Nonetheless, there is what this all-time high, which is 3,500, that the market is what aiming to what tap. But since according to the range, if we see enough evidence on the lower time frame, then we can try sells from 3350, possibly going down. But then for us to try a sell, then we need to see enough evidence on, let's say, the 4 hour. And on the 4 hour, we could see that even on the 4 hour, there is currently no evidence to open sales yet. And if market opens and we see enough evidence, then where is going to be our TP? The TP, first TP, if we see enough evidence, is just going to be around the psychological number of 3,400, which means that when market opens and we see enough evidence to sell, then we can try our selling opportunity right from here. And then our TP, first TP, is going to be just here, SL at the top of the candle that give us the evidence. And we can only confirm or add more cells if and only if we see the 4 hour candle close below 3,500 and stay below. So when it close and stay below, then we can look forward further selling opportunity down to 3,350 and then probably down to 3,300 before any further buy. Either than that, when we see enough evidence for a sell on a more lower time frame, maybe 15 minutes, and we take a sell, our TP is just going to be 3,400. And this is a level where price can tap, and then from this zone, price can go up and then further go all the way, creating an all-time high, as we already saw on the weekly and the monthly. So on a 15-minute time frame, which is an intraday time frame, all we could see is this pin bar from Friday, which means that when market opened and we are not able to see any break above this Friday's high, which is 3455, and we see enough evidence for sell, we can open our sell when the evidence presents itself, and then our stop loss above 3355, whilst we target first TP around 3420 and then 23400 on the 15-minute time. Like you already know, trading is more of reacting than predicting. So I've given all the scenarios in which gold can play out. We are going to be reacting. So if you want to take the same trade as me, all you got to do is to join my live trading on YouTube. Subscribe so that you can get notified when I come live and I'm about to take the trade according to what the market presents for me. Another way to jump into a buy is if the 15-minute time remains very strong above the 3350. Like you already know, 3350, 3355, 3345 is a psychological level. And if gold remains strongly within this zone, then we can look forward a continuation chart pattern within this zone and open buys to the round 3355 that we are expecting. So this is a complete breakdown on gold from the monthly all the way to 15 time frame. Like I always said, trading is what more of reacting than predicting. And the month of August, on the fundamental side, the month of September is going to be full with a lot of red folder news, which means you cannot really predict the clear movement of what is going to happen in gold. That is why you need to be ready to react rather than predicting. Because from the 1st of September down, even this month, we are expecting a rate cut, right? So when one of the key fundamentals of this month is what is the rate cut, right? Where they are expecting what the Fed to cut rate, right? And if they cut rate by 25 basis point or 0.5, that is going to act as a bullish indicator for gold, and we can see another all-time high as predicted by the asymmetrical pattern that we saw, or sorry, the ascending triangle pattern that we've indicated on gold earlier in the analysis, right? So when the rate cut happens, then that is going to be an indication for gold creating all-time highs, right? So my bias for the month is still a bullish month, but like as we said, trading is reacting than predicting. So if you want to catch the same trades or follow how I'm going to get my entries, all you need to do is follow here, turn on post notification, use the link in my bio to join my YouTube channel by subscribing and catching me live from Mondays to Friday, where we take trades live. Thank you for watching. Peace out.